In this video, I will be sharing a highly profitable stop and reverse trading system using the Heikin Ashi charts and two SuperTrend indicators. The strategy in itself is only based on the SuperTrend indicator and it is fairly simple to execute. As I stated before, it is a stop and reverse system. This means that, whenever we exit a trade, we will create another trade in the opposite direction at the same time. For instance, if we are exiting a buy trade here, we will create a sell trade as soon as we exit our buy position. It is as simple as that. Once I reveal to you the strategy, you will find it extremely easy and simple to implement. So let's get started. But before we start, be sure to hit that like button and subscribe to our channel so that you don't miss any of our new videos. With that being said, let's get straight into the strategy. The strategy that I will share today is a trend-following strategy. This means that we will trade in the direction of the trend only. If the price is in an uptrend, we will look for buying opportunities only. And if the price is in a downtrend, then we will look for selling opportunities. When it comes to time frame, the strategy is suitable for any time frame. If you are a day trader, you can use it on a 5-minute or 3-minute chart and document the results. I have used it on 1-hour and 2-hour charts, and it seems to be working just fine. Of course, you can use it on even larger time frames like the daily or weekly charts. Since this is a stop and reverse system, I feel that there will be a lot of trades to be taken on a 5-minute or 3-minute chart. Therefore, I recommend you to use this strategy on 1-hour or larger time frame charts. Now let's understand the strategy itself. The strategy is based on the SuperTrend indicator. The SuperTrend is a trend-following indicator that is very similar to the moving averages. It helps in identifying the short-term trend of the market. The SuperTrend is calculated using ATR and a multiplier. We can identify the trend based on the color and placement of the SuperTrend indicator. If the SuperTrend is below the price and it's green in color, this signifies that the price is in an uptrend. On the other hand, if the SuperTrend is trading above the price and its color is red, then this signifies that the price is in a downtrend. A lot of traders use the SuperTrend indicator as an entry signal. For instance, when the SuperTrend turns green from red, a buy signal is generated. So they buy at this point and they keep their stop loss below the SuperTrend. As the price moves up, the SuperTrend will also move higher. They will trail their stop loss along with the SuperTrend. Eventually, when the SuperTrend turns red from green, they will exit at that candle and enter a sell trade. In theory, this strategy sounds good. And actually, the strategy does perform fairly well in most circumstances. The only problem occurs when the price becomes choppy and enters a sideways range. During such times we see that the SuperTrend generates a lot of trade signals and it becomes really difficult to make profits during such times. To address this problem, we will add another SuperTrend on top of the existing one. Secondly, we will make use of the Heikin Ashi candles to filter the noise. The Heikin Ashi candles are different from the regular candlestick charts. The main difference is that the Heikin Ashi charts show continuity in trend and reduce the noise on the charts. Other than that, the candlesticks in Heikin Ashi are quite similar. Now let us understand the exact rules of the system. In this trading system, we are using only two indicators. Both of them are SuperTrend indicators with different settings. On the first SuperTrend, we will set the period to 14 and keep the multiplier to 2. And, on the second super trend, we will keep the period to 21 and the multiplier to 1. This gives us a short-term and long-term super trend. And of course, we will choose the Heikin Ashi charts instead of candlestick charts. The rules for buying are that we want to see both the super trend indicators turn green. That's it. Just one rule. When both the super trend turn green, we buy at the close of that candle. There is no stop loss or target in this strategy. We will exit when both the super trends turn red. Let's look at a trade example. Here on this chart, we can see that the price was in a downtrend initially. This is shown by both the super trends, as they are red. Then, we see that the shorter-term super trend turns green. This is a positive sign, but we will not buy just yet. We will wait. Subsequently, on this candle, we see that the longer-term super trend also turns green. Now, we have both the super trends as green. So this is a buy signal. We need to enter a buy trade here. For our exit, we will wait for both the super trends to turn red to exit. In this example, here we see that the short-term super trend turns red, but we will not exit because the long-term super trend is still green. Our exit on this trade will happen here as both the super trends turn red. An alternative way of managing this trade would be to assign half positions to each of the super trend indicators. For instance, our entry was here. When the short-term super trend turns red here, we will exit half our position. We will exit our other half position when the long-term super trend turns red, which is at this point. This way of managing the trade is far superior. You get the opportunity to exit half your position early into a potential reversal. And you also get to keep half your position in the trade in case further profits are made. So I will urge you to follow this method of trade management. Now let's look at the selling rules. The rules for selling are also very simple. We want to see both the super trends turn red. We will enter at the signal and we will exit when both of the super trends turn green. Let us look at an example. Here on this chart, we can see that the price was initially in an uptrend as the two super trends were green. Then, we see that the short-term super trend turns red on this candle. But we will not sell yet. We wait. On the next candle, we see that the long-term super trend also turns red. Now, we have both the super trends in red. This is a sell signal. We will sell at the close of this candle. While managing the trade, we would have exited half our position here as the short-term super trend turned green. And we would have exited the remaining half at this point as the long-term super trend turned red. So that was the double super trend strategy. I suggest you trade this strategy only on one instrument for the next 2 to 3 weeks and see the results for yourself. You can also combine the strategy and trade it to enter breakouts in momentum stocks. You might have heard of many other super trend strategies that are just like this one. But the main advantage of this strategy is that it uses Heikin Ashi charts to filter most of the noise in the market. If you like this video, then be sure to hit that like button and subscribe to our channel so that you don't miss any of our new videos.